Welcome back, folks. Just a quick little review on a Tuesday. So we're looking at the E-mini S&P on the left-hand side. This is our daily chart, and the NASDAQ futures daily chart on the right. All right, so we had a down close day here, trading to the low of this buy side imbalance, sell side inefficiency here on the S&P. I got to tell you, today was a little bit of a day where I wasn't willing to trust very much today. And it's one of those things I was commenting on the last video. If you've been following me on my Twitter spaces and the things I've been talking about over the years in regards to the month of August, it's a very fickle month. Now, it doesn't mean you can't make money. Obviously, you've seen I can make money on the month of August. But the point is this. It can be very frustrating waiting for the market to create solid market structure to lend well to a very high probability bias, a very obvious draw on liquidity. And today, we've created what is referred to as an outside day with a down close. So what that means is this day's high is higher than the previous day, and its low is lower than the previous day. So the range is outside of the previous day's range. It's also outside the range of the day prior to it. So over the last 2 days, prior to today's trading, the market has gone above and below. And we came down into the low of this inefficiency here. What I want to see tonight in the London session is, do we make a move outside of this inefficiency? So if we trade outside of it, come back up and work inside of this wick, and or treat the low end of this imbalance as resistance and offer some displacement to the downside, I may entertain the idea of looking for an opportunity into the consequent encouragement of this wick and any overzealous price delivery on the downside. The sell side would be below here. If you look at this low and this low here, they're relatively equal. And then we have consequent encouragement of that wick as well. So I'm trying not to beat the drum too hard and loud, but it certainly looks like it might be warranted, to expect lower prices on ES and NASDAQ. What changes this? It has to trade above the high of today. So in other words, trading to 45.20 makes me consider going into it looking for the longs again. Prior to that, I'm not really interested in going long. In fact, I'm really not trying to push the button too much this month, because August is, like I said, one of those months that are traditionally unfavorable in comparison to other months of the year. Meaning that, yes, you're going to see fluctuations. Yes, you're going to see displacements. You'll see nice little price runs here and there. But by far and large, it's one of those months that it's a hit or miss. And when it's not really trying to deliver for you or give you opportunities that set up low risk, high probabilities in terms of success, it's better, in my opinion, especially as an educator, to try to sway you into thinking about doing less during this month. On the NASDAQ on the right-hand side, we can see here this long wick, consequent encouragement, which is midpoint of that. We treat wicks like gaps. And the midpoint of the gap or inefficiency is consequent encouragement. We see it trade up into that today on the daily chart, but it did not create an outside day on the NASDAQ. Compare and contrast the outside day that was over here on the S&P versus the standard higher high, low close. And we have a swing low formed here. On ES, we don't have that. We have lower lows. We have relative equal lows down in here. We also have mean threshold, which is the order block midpoint, which is just below yesterday's low. So I'm going to look and see if that might in fact offer something. When I wake up tomorrow, I don't stay up during the London session anymore, but I'll be watching things. When I get up, I usually get up around I don't know, anywhere between 5:30 and 6. And then I take a look at the charts, and then I'll usually visit you all on Twitter. But that'll probably be what we do tomorrow. And if there's anything that gets my attention or has my interest, if you will, I'll send that by way of Twitter. All right, hourly chart here on the left-hand side, we have this area here, trade up into this sell side of balance, buy side inefficiency. The bodies were just outside of that inefficiency. Ultimately, it gave up the ghost overnight, broke down, and this buy side of balance, sell side inefficiency acted as an inversion fair value gap. So if it's dropping down in here, the normal tendency is for anyone that might see this here and think, well, I've seen some of those ICT videos. It looks like it's a buy there. It's not likely to do that if it's a bearish market, so we see it trade up to the high of that inefficiency. Perfect delivery. And then sells off. Trades down into this shaded area in here. I'm going to zoom in over here. Okay, you can see the date on the 1 hour chart where this inefficiency is anchored. Okay, and then the full range of that inefficiency on the higher time frame and its consequent encroachment. We see it trade down into it here today. Tried rally again and then consolidated inside of that inefficiency. And then aggressive run to the low. Sell side resides down here around, we'll call it 44.12. So 44.12 on the S&P. If we're bearish, I like the idea of drawing down to that level. Hourly chart here on the right-hand side for the NASDAQ. Okay, we can see how we traded up into the last up close candle prior to this displacement lower. Inefficiency here, again, much like we had over here on the S&P, just outside of that range. And this is kind of what I'm referring to about August. Okay, you've seen many times examples of me taking live trades, demo trades, calling things in advance on Twitter or outlining them in an analysis in videos to see what we would expect the next day. So there's obviously a means of predicting with a great deal of precision certain elements in price delivery. But I have to take a step back sometimes in August because this is what it looks like sometimes. Okay, when things are just a little bit out of focus, a little bit more manipulation, the markets are a little bit thinner, so they do a little bit more damage than they normally would. That's why we're seeing this inefficiency here. It's coloring outside the lines, and then it delivers aggressively. We have a sell side imbalance, buy side inefficiency, trades up to consequent encroachment, half of the inefficiency here during today, and aggressively drop lower into this buy side imbalance, sell side inefficiency. Look at the respect around its consequent encroachment, midpoint. Trades to the top. Look at the bodies here. This is telling you what? The bodies tell you the narrative. It confirms or denies an underlying delivery of buy side or sell side. Here, it's indicating that this candle's low, even though we traded all the way down here. The bodies are respecting the high end of that old buy side imbalance, sell side inefficiency here. So we're expecting this to act as what? Resistance. And it makes it what? An inversion fair value gap. The market delivers aggressively, trades below the rejection block, which is the lowest down close price here in this swing. There's sell side residing down here, so it'll be interesting to see again if we can mount a continuation on the downside. But I'd like to see the London session really support the idea of it, not just consolidation and then get the move later on in the New York session. I want to see a little bit of movement lower, and then maybe some kind of a fair value gap or retracement up into a short-term premium on a 1 minute or 5 minute chart that could set the stage for a rundown into that 15.020 level. And this is a little too overzealous, I think, for the S&P. I think that it may need to take a little bit longer than what the NASDAQ may require to get below here. This is a lot more of a range for S&P. Left-hand side, 15-minute time frame. Again, you can see the market working inside that inefficiency. and where we are just outside the lines. And then we break lower. Look at the high here and here. Comparably, that same high, this high on the NASDAQ on the right side is directly related to this high on E-mini S&P. This high is in comparison to this high. So NASDAQ was able to make a higher high, whereas the E-mini S&P was unwilling to make that higher high. So we have an SMT divergence there. And this inefficiency on the hourly chart, again, as I mentioned, when we were looking at the hourly time frame, it ran up and hit that. And even though this inefficiency is outlined over the context of a 1 hour chart, we're at a 15-minute time frame now, so all of this changes when we drop down to a 15-minute time frame. But keeping the higher time frame in perspective, it doesn't negate the idea of that inefficiency's midpoint, which is consequent encroachment. So it hits it, lots of sensitivity there. Also qualified and confirmed by SMT. So we did not see that higher high on E-mini S&P. So we had a break lower. This move below that last up close candle. We opened, traded right back up into that order block. That is one of the strongest signatures you're going to get, and then immediate price delivery to the downside. And we have a ICT bearish reaper. High, low, higher high. That means this is what? ICT reaper. Project that through. See that trade up into it here. Lunchtime. Fair value gap. Trades lower. Attacks the sell side and reaches for the low end of that old inefficiency shaded in blue. All right, and on the right hand side we have a buy side liquidity pool here that was in fact purged. Trades up into the inefficiency, hourly, sell side imbalance, buy side inefficiency, the consequent encroachment it trades to there. Bearish ICT reaper and order block. So we trade up into it, we have a breaker. You can see we are in fact respecting that. So it's this candle right here. This candle right here, that is the actual bearish breaker. Okay, so this down close candle. Now why am I picking that one and not anything else in here? Well, you don't want to use this one, even though it has the lower low. Wicks are, again, where they do the damage. The bodies tell you the narrative. So the biggest down close candle and lowest close, that's this one right here. Okay, so that's my bearish breaker. If you take that range and highlight that, take everything else off the chart that I'm having here in terms of annotations. On your 15-minute time frame, if you take that and you apply it to here on this candlestick, you'll see that the bodies are respecting this range here. The wicks are permitted. They're always permitted to trade outside the lines because that's where the damage is. And this is why it's important that you do a lot of back testing so that way you can see these types of things occurring. You get familiar with it in static chart format, and then when you eventually start doing tape reading, that means not demo trading. That means not trying to get a funded account challenge passed. That means not trading with a live account. It means simply watching price action with no risk, no concern whether you're right or wrong. And you're reading these levels as it forms and develops in real time. And you'll see when this candle opened here, at one point it was a full-on bullish green candle up into this point. But referring back to that bearish breaker, you allow for that, especially if we have a bearish order block and a reaper here. So you're going to give it permission, if you will, in your analysis to trade just outside what would otherwise be defined by the lines of this bearish breaker. You have a little bit higher premium arrays that it may want to visit. The fact that we closed here on this candle would give me the trust that it would be willing to maybe reach up to that level, but I'm going to see it close back inside of the shaded area here and back inside of the range that would be here. We'd in fact see that. And then all of a sudden the market continues and trades lower. This one here is a nice little sell side imbalance, buy side inefficiency. Trades up into it here for a silver bullet and drops down and attacks the sell side there as well. Finally, moving into the 5-minute chart here on the left-hand side, we have an inefficiency on the S&P and the bearish order block. trade up into it there, displacement to the downside. This is where we trade back up into that Reaper on the 15-minute time frame. You have a fair value gap there as well in the form of a sell side imbalance, buy side inefficiency. Trades right up there. That would be a wonderful short for the lunchtime macro, meaning that it would attack the sell side in here, and we work down into it, and finally the last hour trading aggressive run into it, reaching into the low end of that shaded area. Small little inefficiency again, much like that one. We trade up into it, and we color just outside the lines, but your stop would have to be here. And again, aggressive run down into the 1448s. NASDAQ on the right-hand side, you see we had that consequent encroachment on the hourly imbalance, displacement to the downside, fair value gap. It's not highlighted here, folks. That's the reason why I'm telling you about it, because if I had everything on the chart, it would clutter the chart up. Now, I saw a comment in my videos, and it's a fellow, I'm assuming it's a fellow, saying that all these things are confusing. Well, I would readily concede that if this is the first time you've seen this, it's going to be overwhelming, which is the reason why you can't learn my concepts in a boot camp type thing where you watch a couple videos or a 5-minute trainer and there it is. And it's the reason why my stuff is so precise. The accuracy and the ability to read price action before it happens, you need to have these types of understandings. And it's not a one video, one trick pony and it just explains everything for you. You know, I never promised it was going to be easy to learn. I promised you that you're going to have to work your ass off with me if you want to have the level of precision that I can teach you. But you don't need to go to this great length if you want to just simply look for something that's easy to follow. It's rule-based. That's the Silver Bullet trade, and it's the 2022 model. Those two models are easy. Or trade the optimal trade entry. There's 3 specific models that I taught for free that are complete on this YouTube channel. When I'm doing mentorship, that's for the freaks. Okay, that's for the people that just need to know everything. They want to know how they can trust holding onto a trade. They want to know how to avoid taking the wrong fair value gap and how to know when order flow is bullish or bearish and feel confident in holding the position, when to hold for specific targets. You know, that type of level of understanding isn't going to come by a very short video series or one video. And it can't come in the capacity of a 5-minute or 10-minute video. It can't be done, folks. Okay, I promise you that. There's this big movement that's out there trying to make and capitalize on the fact that I'm very long-winded because I have a lot of experience. And I'm already condensing a lot of experience into small videos that you think are long. They're not. Like, these are abbreviations to me. And you have to go through a lot of understanding to get to the degree of precision. And here's the thing, consistency. Do you want to just be accurate once in a blue moon, once in a while? Or do you want to be able to go into the marketplace, know exactly what you're looking for, and when to avoid certain things that may have caused you or other traders that think they know how to do these things, cause them to lose? Like today, I felt that I was actually out of sync with the marketplace. I just didn't feel like I was in sync. I was looking at the dollar index. I was looking at the euro dollar. I was looking at the E-mini S&P. I was looking at the NASDAQ, and I was looking at the Dow. And I just didn't feel in sync with the marketplace. So while I was able to take money out of the marketplace in a real account, $2,200, you can see that on my Twitter feed, I didn't feel like I was in tune with price. It was very hard for me to focus. And once I actually exited the marketplace, I wasn't interested in, I was very thankful that I didn't participate anymore. So everything I'm showing you here, this is all after, I guess it'll be like 11 o'clock in the morning. This is all observations I made after the fact. Okay, but I'm teaching you how to annotate your chart so that way you can see what it was that would be gleaned useful in terms of your journaling and back testing and drawing your eye on specific things that would be meaningful to you. I mentioned 2 or 3 things in live commentary on Twitter for NASDAQ, and they were helpful today. And it was, obviously presented in the context of tweets. But the NASDAQ here, you can see we traded up into that bearish order block inside of the bearish Reaper, and the bodies are respecting that lower inefficiency. Bodies are stopping right here at it. And then we have a small little gap there. Trades up into it here, and then works lower. Order block that's not annotated. I'm just giving you additional things you can add on your chart. And then displacement again below these lows. Inefficiency. That means it's a fair value gap in the form of a SIBI, sell-side imbalance, buy-side inefficiency. This is the 2 to 3 o'clock ICT Silver Bullet PM session. I did not trade the PM session. The market traded up into it here, going into the last hour of trading, and then we aggressively worked lower, attacking the sell side here. So if you felt like this was a difficult day, or felt like you were just having a real hard time getting your footing, I felt that way today too, admittedly. I don't know if it's because I had my niece here today visiting. I don't know if it was because, like I mentioned on Twitter, I was listening to my new boxer puppies give my wife a hard time. And I just couldn't focus. And I'd like to believe I would have been able to take that silver bullet here in the afternoon. I'd like to believe I was capable of obviously doing that with my live account, but I didn't participate any further than outside what I've already shared today. And I don't know what we'll have tomorrow, but I'm not trying to inspire you to trade. I want you to think about what I said, going into this month. This is a month where you want to basically do a lot of studying. And that's why I'm trying to do a video each day to remind you of that. I want you to think about abstaining, not participating, and is keep your powder dry, if you will, which is an expression for not taking shots at anything. Just observe and study and keep the availability of your funds, your mental capital, because you don't want to wear yourself out this month. And the type of price action that these August months can provide you, they could wear you down. And then when the markets get a lot better, like in September and October, November, you may not be psychologically and emotionally equipped to participate when it's better. Or you may not even have your accounts because you probably roasted them and blown them in August. So it's very important that you keep that in mind. So hopefully you found this one insightful, and I will touch base with you tomorrow. Until then, be safe.